talk about a company that a lot of people will be much more familiar with, and that is Aspen, which is South African, but of course now a global player, focus on a bunch of different stuff, but mostly anti-coagulants, that's stuff for preventing strokes and that sort of thing. Anesthetics, portfolios that they bought there from AstraZeneca and from GlaxoSmithKline, and then also infant nutritional products, baby formula. Market cap, 127.3 billion rand, listed of course here principally in the Johannesburg market. Price to earnings ratio 25, dividend yield 0.9%. Share price will reveal that it went to 433 rands a share in the beginning of 2015, but since then it's been heavy sledding, tough going. Earnings and cash flow has been fairly strong, but lots and lots of deals, which has kept everybody guessing.
Yes, and the biggest one of those deals, or the biggest counterparty, has been GlaxoSmithKline, which had a significant stake in Aspen, but also sold down roughly a year ago, a significant part of that stake. And Aspen has built these four core pillars of their business from buying bits and pieces from some other multinationals, and they've got more focus now, so I like that. But we spoke about the pricing issue. It has also come to the fore in the case of Aspen, with the oncology drugs in the EU, with the Italian and some of the other regulators saying, well, it might be price gouging because they increased the price by more than 1,000% in a short while. Well, Aspen has said, well, the price was ridiculously low before. It hadn't been increased for 10 plus years.
The price was so low that it wasn't even covering the cost of production or distribution.
Yeah, so there's some uncertainty still whether who's the good guys and who's the bad guys.
Because where we've seen the European Union's authorities look at cases like this, they actually have a couple of them that have already been heard, where fines were levied, but then the companies have taken them on appeal. It looks almost as though sometimes as though these investigations are political in nature. They want to sort of make a point and send a message to the industry, but they know that the case isn't perhaps all that strong.
That's what's so difficult. I mean, these, in general, Europe, US, these are capitalist markets, which allows one to increase the prices of your products if you feel it should be, and it's open to competition to compete with you. But if you have drugs that are very specialized, orphan type drugs, not a lot of competition, and you hike the prices by 1,000% or more, at what point do you say regulators should step in and say, laissez-faire economics in this specific sector cannot work? And we might be close to that point, and we have seen that in the US more recently.
Okay, so I had a interaction with Stephen Sard not so long ago. He's a wonderful fellow and a dynamic manager, and what he was implying is that many drug companies, in fact many companies, buy businesses and then leave them to operate independently because it's easier that way, and you just find a good manager and on you go. That's not the Aspen formula. What he likes to do is typically fire the managers who've been there before, because normally businesses are for sale for a reason. Then he wants to take like the manufacture of a particular product and do it in a different factory in a different part of the world, and then rejig completely the sales incentives. And his argument is that that is the only way to extract, at the end of the day, the real benefits from buying a new product and buying a new opportunity in a business. But it's much more dangerous because you can sometimes really shred the existing business, and it's also potentially expensive, time consuming before you really see the benefits. So his argument is they've done so many deals over the last 2 or 3 years that they are now only just getting to the point where the juice is going to flow.
Exactly. The four focus areas, they got it specifically in heparin, that whole dynamic of having the manufacturing and the distribution now in the same corporate entity after buying 2 bits from 2 different other companies. So they are doing that. Still some risks, for instance, like their main anticoagulant product is an injectable, while you get the oral one being more preferred by people because it's easier to take a pill than inject yourself. So it's not clean sailing from here. They still have some execution to do, and we'll see after the June results. Remember, it's a June year-end for Aspen, so in the next 2 or 3 months we'll get an indication how they're going along that route. But it's not easy, but higher risk, more difficult, means also higher reward, and you can see that in how the Aspen share price has done.
And obviously now that they're bigger internationally, with more than half of the earnings coming from offshore channels, they have got more products to represent, so they've been able to get proper scale and administrative structure in Asia, in Latin America, in Eastern and Western Europe, here in Africa, even in Australia. So they can get, again, scale efficiencies from that.
Yes, your sales reps are more productive, you've got a bigger basket of
the
products.
market, unfortunately, is not really giving them the benefit of the doubt. This negative mood of the investigation in Europe, plus the anxieties about all of this stuff, has led to a share price which has been really underperforming after many years of high performance. So you can tell, even the news articles and so on, people are a bit grumpy.
They are, and infant milk formula as well. They had a big business in Venezuela, which got hit by the economic turmoil there. They tried to do a deal in China. They weren't successful in infant milk formula. So a lot of moving parts. They got a lot of balls in the air. So far they've juggled and haven't really dropped one. But the market is cautious because it is bigger and they're doing more at the same time.
But the price earnings ratio now a little bit more meaningful. So hot or not for you?
Well, because of that, and yes, they might have some issues when it comes to pricing from some products that they bought, and hopefully if that is contained, I see a lot of value in the current share price, given a lot of opportunity in the dynamic management team. So in Aspen's case, I would say hot.
Yep, good.